Good morning, traders. Today is May 2nd. My name is Charles, and this is the Pirate Traders live stream. Happy Monday, everyone. All right, well, what do we have happening here in the charts? On Friday, we broke out of the balance area that I felt like we may stay in for a little while, so that was bearish. We also did it with a spike down, which is bearish as well. So this morning, spike rules are in play. Spike rules tell us that opening inside the spike from yesterday is bearish. So that is a sign of continuation of the new downtrend. We had value overlapping to lower than the previous day. So that is the beginning of a downtrend. I do feel bearish this morning. I feel like the most likely scenario is further downside continuation. So I'm looking for resistance at right around the base of that spike, the 4150s area. Pretty much exactly where you can see the overnight found resistance. I'm looking for the same thing to happen there as the market pushes up into it for continuation lower. As far as targets to the downside, breaking below yesterday's low, coming back up and finding some resistance would be a good short trade for continuation, at the very least to get to the overnight low, and if not further from there. As far as looking for a trade to the long side, if we were able to get above the overnight high, come back down and find support, I'd be willing to go long in there. However, there's a lot of resistance just above. So I wouldn't look at it like we're breaking back into balance until we got through 4178. Actually, those single prints... Oh, it's just mislabeled. It's a weak reference. Okay. So yeah, until we get through 4178, I wouldn't expect much momentum to the upside. And like I said, to me today, the most likely scenario to play out is continuation to the downside. I'm feeling pretty bearish. And that's just because if you look at the daily, this was that balancing area that we were looking at. Okay. And we've now broken out of that balance. And what often happens when you break out of balance is you get excess to the same, level as the actual balance itself, the same like range. So that could be a downside target in the, 4,000s. Doesn't go there immediately, but the highest probability when you break out of balance is that you will get excess in the direction of the breakout. So this, and like I said, I wouldn't trust pulling back up in unless we got through all that resistance I just pointed out. So to me, the market is, the market is being controlled by the sellers now, and the buyers must prove themselves before I would trust any kind of long trade. We are opening inside the previous day's range, so some chop would be expected. So we're just keeping an eye on resistance and support and seeing which one breaks first. We got good taper on the high, but I don't love the 76 or the 56 contracts, so we're likely to get some more two-sided trade in there. Good taper on the low. If you have not yet, please smash that thumbs up button. Really helps out the channel to get those likes first thing in the morning. I sure would appreciate it. All right, it's worth noting the overnight inventory was completely neutral. They closed in almost the exact same place they opened. So if the market starts to pick a direction this morning, that is new sellers or new buyers piling on. Right now, seeing those ticks below the zero line, it's new sellers. So things are getting bearish. Getting below yesterday's low would be bearish. We would look for a push lower and then for it to come back up and find resistance here. There is that break. Okay, so now we're looking for resistance at 41.19. Do new sellers pile on right here? Do we hold those ticks below the zero line? Okay, there you go. Got the push. So I am bearish for continuation to the downside. Good morning, Scooball, Diego, FRM, Rev in the house, David Glass. Good to see you. Okay, so now we're looking for resistance at the overnight low, 41.11. And continuation to the downside. MW in the house. Philip is here. T-Bay. Amir, Hustler Forever. Skewball. John. Eldora. And Mick Stockster. Good morning to all of you. Bossman, good morning to you. Pavel, good to see you. Cyrus is here. Greg H. Nor Auto Trader. Man, everyone's here today. Levi, good to see you. TV in the house. Dean, good morning. And Jack, welcome. Okay, getting resistance at the overnight low. A sign the sellers are still in control. If the buyers are able to get through there, the next resistance is the halfback at 41.19, also yesterday's low. Trading Donkey, beware of the dead cat bounce today and tomorrow. Beginning of the month passive flows. I don't know, man. Breaking out of balance. Pretty bearish. We'll see. Fat Thor, me likey? You likey the sell-off? That's good. J Trader, good morning to you. Tom D in the house. Tom D didn't receive an email this morning. Email hasn't gone out yet. We're still on the public stream. I send it out when I go live on the other one, just because sometimes I end up staying on this one a bit longer or whatever. So it'll come. Scott bringing up that he asked me about data this weekend. Yeah, I'm not a great source for stuff like that. I'm not really very knowledgeable in those type of things. The data I use is called IQ feed, and it's just regular, level 1 data. Anything beyond that is just outside of my my wheelhouse. So I would recommend you check with Google for those type of questions. All right, looking for some resistance here at the halfback and yesterday's low. I'll remain bearish below the opening price. If we get back above it, I'll be back to neutral. Looking for resistance at the base of the spike down from yesterday, from Friday. All right, back to neutral. It's not bullish by any means. Back to neutral, just looking for resistance higher. Boss man, done on the NQ, one and done. Why not stick around, bro? Lots of trades will present themselves today. But I'm glad you're done. Must be nice. Wrap up your day in the first 10 minutes. Rocket Bank holiday in London and news at 10. What's the news at 10? The manufacturing PMI. Scott, everyone wants to know what the market will do. Every day could be red, but some kind of relief is due, right? Or maybe it's being saved for the Fed meeting. Yeah, the markets can't go down in a straight line, right? That would be impossible. But your relief was this right here. That was the relief, right? They were in a big downtrend. They got one small little bounce, got right into resistance at that previous balance area high, and instantly got that big sell-off. So that was your relief right there. It was on Thursday. So now we are beginning a new downtrend. Okay. Just like, let me just zoom out a little bit here. Just like this, where the market was trending higher, and then you had value overlapping to lower. The next day value was lower. We started a trend where it kept going lower, right? We're on day 2 of that right now, or day 3. Balance leads to excess. So I still believe the momentum will be to the downside. And it's not just because we opened in the spike. It's also because of how much resistance is above us. So you got the base of the spike as resistance, and these K-period single prints are resistance. So to truly get bullish today, to get some kind of a big bounce, they'd really have to work their way through that, which they might. I'm not saying it's impossible. Just to me, it's less likely than continuation lower, where they've got the momentum. It's much easier to take the market lower because they've got the trend. JB, good morning to you. Welcome. Donkey, when what should happens doesn't, this should be the most bullish part of the month. Semis catching a bid. Stopped within 4 points of the February low. Yep, just below it. Who do you suspect is buying that low? Amir, what if today is a look below and fail? It's a great question. Like I said, we'd have to get through all this resistance before I'd take that into account. So we'd have to get above the base of the spike at 54, get above the base of the single prints down at 71, head up and repair the weakness at 78, and only then would I see it as a look below and fail of the balance area. I think there's a lot of sellers who would love to get filled up here. So I would see it as a look above and fail if we got above 78 and then got support and continuation. But until then, the sellers are still in control of this market. Boss man, I'm sticking around. Just going to watch how these opportunities present themselves, but not trade anymore. Hey, that's a good idea. I don't hate that. Okay, so ticks struggling to get back above the zero line. We are now passing back through the half back to the downside. So if we get back below the overnight low, I'm bearish once again for continuation. Aviv, do I consider the average point range of the index when I analyze? No. I suppose subconsciously I have a certain understanding for the type of range that the market makes, and so my brain knows if it's more volatile or less volatile, but I don't have any like specific numbers I look at or anything. Let's take a look at the NQ. Okay, so NQ resistance, same thing, around the overnight high. The area where they ran out of buyers in the overnight will likely act as resistance for today's market. Then you got a set of single prints at 13,011, resistance there. Another set at 13,047, resistance there. They'd have to get through both of those for me to get bullish on the Q. Lots and lots of resistance above both markets. You also got the 20 moving average on the 15-minute candles just above price on the NQ as well. Jitten monthly candle on the continuous open below its 20 SPX. Well, it's a bear market, you know. Gonzalo, would I be able to analyze the SPX chart? I mean, it's going to move pretty much with the ES. So same thing as the ES. You had a balance area that you broke out. That balance area low was a little bit above 4160. So as long as you stay below that balance, you see it as a breakout of balance, which often leads to continuation to the downside. Balance leads to excess. If we just go back a little ways, we can see we balanced here, broke out to the upside, we got excess. Balanced here, broke out to the downside, got excess. Balanced here, broke out to the downside, got excess. Balanced here, broke out to the upside, got excess. Balanced here, excess. Balanced here, excess. Balanced here, excess. I can do this all day. Balance leads to excess, and excess leads to balance. Ticks on the NQ looking a little bit more bullish than the ES. And they are working their way through that 20 moving average. So looking to test those overnight highs on the Q. Andrew M., I know you trade the market profile, but you look for rotations. Would you recommend looking at a point and figure chart? I don't know what that is, so I cannot recommend it. But as I've always said on this channel 1,000 times before, anything that exists works, right? No, whoever invented whatever that is, the reason it exists is because they discovered that there was a pattern that was readable and tradable using that tool. And all you have to do is just become a master of it. Look at it all day, every day, always. Learn to recognize the nuances. When does it work? When does it not? Is it as effective in a volatile market, in a slow market, in a fast market, when there's a larger trend intact, or when the market is balancing over a multi-day range? You could pick any technical analysis tool you want. You must just spend 6 months mastering it before judging whether it works or not. It's not the tool, it's the user. That's what matters. But it's worth noting, the more of these things that you look at, the harder it is to become a master of them. You will find, you'll do better trying to find rotation based on signals from market profile if all you look at is market profile, because you will become an expert at seeing how the market behaves looking at it this way. Same thing would be true of any other tool. Scott, I recommend the Nancy Pelosi indicator. That one has done quite well. You could backtest it. Okay. Well, definitely those numbers coming out causing a little bit of algorithm trading here. So let's wait and see which way the algorithms take it. We can tell that just because of how quickly the momentum changed at the moment the clock struck 10. Okay, so those PMI numbers came in a little bit under forecasted. I have no idea what that means, but there you go. Of course, the market could react bullish or bearish to that information as it's random. True. It's a bit like Terminator, Man Against Machine. It feels that way sometimes, doesn't it? Those algorithms, they can think so fast. They don't give you a chance to assess what's happening. All right, some buyers stepping in. They're trying. They are trying. Next resistance for the ES, 4152-ish. Do not love the exactness of this 4130 level. That would be weak hands that keep buying exactly there. So if it breaks, it could lead to a bit of a sell-off. A little bit of a liquidation back down towards halfback. Daniel, I'm conflicted. I made my $200 for the day already. Should I stay and lose it all or just leave? How about this? How about you stay, but you size down so you don't take on quite as much risk, and you only take trades that you have extremely high confidence in. So you be okay with watching the market the rest of the day, and if you don't see a trade that you're certain about, you just stick out. You made your money. You're good. You don't need to feel that pressure. Like, yeah, okay, so as we're breaking that level, that little volume cliff, we're likely to get a little of a liquidation lower. Testing the half back for support, 41.20. That breaking now will likely lead to further downside continuation and get me bearish once again. So yeah, I mean, now that you've made your bag for the day, you're good. Just don't feel any pressure to get into a trade unless it is very, very high probability of success. Looks like that 20 moving average did end up holding as resistance on the NQ. It's a little bit bearish. All right, I'm back to bearish. The buyers gave it a good try. They gave it maximum effort. But the bears are still in control. Okay, looking for resistance at yesterday's low, 41.19. Trading Donkey, little PMI miss. What are you thinking about there? It's like I said when I pointed it out earlier. I don't I don't think, because I know PMI miss one time around, the market will sell off. PMI miss the next time around, the market will push higher. I believe the market reacts randomly to fundamental information. So I'm not going to take it into account at all. Oh, what am I looking at? Targets to the downside? I don't really. That's what I've been all morning trying to figure out. This is the first time since I started trading with the market profile I've had a bear market like this. So I feel like I'm a little blind, like not being able to see to the left exactly where previous support resistance was. I keep adding more and more days, but I can't seem to get the data from back then. Look at that. Still not enough. So yeah, the next major support I see on the daily is the 41.75 level. Ah, they're still loading. That's the problem. Is below weak? Yes, it is. Weak below. Weak below. I'm so sorry. Okay, a little flutter of buying there. Somebody stepping in with some size to the long side. Keeping an eye on these ticks. Can they keep it above the zero line now? Or does it just get smacked right back down? Levi. Do not tell people to turn the volume all the way up. Then they're going to hear every little breath I take and every little sip of coffee, and then they'll complain about it. Smack back down. Bow, bow, bow. So being that we're 10 minutes from printing the C period here, I'm still more bearish for all the reasons I've already listed today. Spiked down on Friday, broke below the balance area. We opened inside the spike. That is bearish. We've got 3 days of downtrending value right now, which is bearish. Looked below the overnight low, came back up, found resistance. That's a sign of bearishness. So we've had a bunch of bearish signals. But when we print the C period in about 9 minutes, if they get that C period above the A period high, I will look for a push up to the overnight high, looking for resistance there, with potential to get some continuation. But of course, if the C period prints and it pushes back down below the A period low, that will be the beginning of a trend to the downside. So we should get some clues as to where the market's going to try to go today once that C period breaks either the A period high, or actually you could really just call it the B period low. Breaking either one of those, it's likely to get continuation in that direction. The internals are obviously not helping here. We pulled the breadth back to the zero line. We pulled the advancers decliners back above the zero line and reversed that downtrend. And then the ticks are just dancing around the zero line right now. So that's not giving us a clear sign. We may have to wait for that C period to break to be certain. But I do still believe the momentum is to the downside. Oh, also, I thought it was worth mentioning, somebody had asked me last week this question, like, sometimes it seems like you wait such a long time to enter a trade. So like today, when we first, in the first 5 minutes, I was like, to get long, they'd have to get above the overnight high and come back down and find support. If they got below the overnight low and found resistance, I'd be short for continuation. And like, that's oftentimes the way I'm looking at it in the morning. And so this person was saying it's like it feels like you miss so much of a move waiting around for the confirmation. And so I just wanted to explain to people the way I think about trading, okay? I would rather, so let's say one potential trade would be to short right now, looking, to repair the weak B period low and then head all the way down to that A period low, right? One way I could trade that is I could sell right now, but I don't know. I don't have any certainty that the market isn't going to just break higher. So that I have no confidence in that trade. So if I was going to get into it, I'd have to get into it with very small size, and it would instantly start to affect my emotions. My ability to read what's happening would be affected literally right now as the market starts to trade its way higher. So what I would rather do is I would rather wait for the market to push lower, repair that poor low, that weak reference, get some resistance, and then sell at that resistance. Now, maybe I only get a move from here to here as opposed to a move from here to here, right? But this move here, I would have so much more confidence in. I could get in with much bigger size, right? So I could make just as much money on a move from here to here as I could from here to here by trading it with larger size and not have to take on the risk of uncertainty up here. Does that make sense? So you only need one, high probability opportunity a day, and you can make massive amounts of money if you have the confidence to step into it with some size, as opposed to having to keep your size super small because you're just kind of guessing and hoping. So that's just something I thought was worth mentioning. People are always curious how I trade. I may only take one trade all day. I may sit all day waiting for one trade, and that trade may only be for 5 points. But if I got into it with 4 contracts, I had a good day. I just made $400. You know what I mean? So that's the way I think about it. I wait for those really high probability opportunities, and oftentimes being patient is what sets those up. All right, well, I'm back to neutral. As they got those ticks above the zero line, kept them above there. And then they push back above that A period high. So now the initial balance is to the upside. Looking for resistance at 41.52. To get bullish, we'd either have to print the C period and break the B period high, or just get above the overnight high, come back down and find support. And even then, I'd only be bullish to test the base of those single prints. Resistance is waiting. Sellers are licking their lips. They're chomping at the bits. Trading Donkey. So the January and March meetings, Fed meetings, both marked to the low. Is that a prediction for this meeting? Looks like the ES is getting some resistance right at that 20 moving average. Can they poke through? Daniel, can you call it rotational? I would not call it rotational. This is just chop. It's just the market trying to pick a direction. But once it does, if it pulls back up into the balance area, if it's able to get through this resistance, the target becomes the opposite end of balance to the upside. And if it pushes back below, it's, you know, the same size range to the, whoops, that's a very crooked rectangle. It's the same size to the downside. The odds of just grinding right at a balance area low, very low. Very low odds. Not impossible, but not likely. The market will pick a direction and make a move today. All right, so we've left behind these single prints in the B period. We also now have the C period above the B period high, so that is bullish to see. So we would look for the market to pull back down and backfill these single prints and find support at 41.41, but this is a little bit bullish. So next stop is the base of the single prints down at 41.7150. Looking for resistance there. If that breaks, a repair the K period high, 41.78. So looking for it to poke above there. And then does that cause the sell-off? If not, support is buyable. But as I said, I do think there's sellers lurking in the wings, waiting up here. So I would wait for a pullback to buy support. With that, I shall bid you all farewell. Thank you very much, and we will see you here tomorrow morning. If you're not a member of the brigade, there's a link in the description. It costs $10 a month, and then you get to hang out all day, every day. Ask me all the questions you'd like. If you feel like that might be helpful to you, join the brigade. It's only $10. What's the worst that could happen? Less than the cost of a cheeseburger nowadays. All right. Have a great rest of your day. Bye-bye.